Hi everyone, welcome back to the channel Commerce with Chaitanya. So, how are you all? I hope all are doing great. So, in our previous classes, we have done a receipt and payment accounts. So, now in this class, I am going to teach you income and expenditure format. Okay, you know that in NPO, receipt and payment account, income and expenditure, and balance sheet, three accounts we are going to prepare. So, first one we have done, and this is the second one. Before going to explain the format, okay, pro forma, you need to remember few things, which is first one is income and expenditure. I'm writing in a short form. Okay, income and expenditure account is just like it is just like a profit and loss account. So you have learned profit and loss account in first year. So what is the nature of what is the nature of profit and loss account? It is a nominal account. Okay, nominal in nature. Nominal. So nominal in. So what is the nominal account rules? Debit all expenses and losses. Credit all incomes and gains. So this is the rule of nominal account. So this rule we are going to apply. As I told you, this is just like a profit and loss account. In profit and loss account, we used to debit all expenditure and credit all incomes and gains. Okay, same in income and expenditure also, we'll post debit side expenditure and credit side income. So this is the format of income. This is the format of income and expenditure account, and this is debit side, and your right side is credit side. Simply write expenditure amount, income amount. So debit side all expenses. So debit side all expenditure and losses, and credit side all incomes and gains according to the nominal account rule. So these things you need to remember, and one more important thing you need to remember, only current year transactions. Okay, current year. Okay, this is first one, and this is second one, and this is third one. Okay, current year transactions will take. Current year transactions which are revenue, expenses and incomes only. Okay, points to be noted, these are very important now. So in income and expenditure account, we are going to post only those transactions which are related to current year, not previous year, not next year. Okay, only current year transactions we are going to post. So revenue, expenses and incomes. What do you mean by revenue? Revenue means recurring expenses, and recurring incomes only we are going to take in this account. So no capital expenditure and no capital income. No capital expenditure and income we are going to take. Okay, we don't write capital expenditure in books of income and expenditure accounts. Okay, in our profit and loss account, and this is income and expenditure account. So profit and loss. So in profit and loss account, we find profit, either profit or loss. But this is a not for profit organization, clearly mentioned, not for profits. Okay, these are service motives. So we don't use the word profit. Instead of profit, we use the word surplus. Okay, surplus is the word which we use instead of profits. Okay, I will write here profit. Okay, in place of loss we use deficit. Okay, loss we use the word deficit. So surplus means migulu. Okay, and this is purely commercial, and this is non-commercial organization. So we call profit as a surplus and loss deficit. So coming to the format. Okay, then coming to the income and expenditure account. So first we'll start with the expenditure side. Whatever expenses related to NPO, we post on debit side. So, and add outstanding expenses of current year. Outstanding expenses. Okay. Add outstanding expenses of current year. Outstanding means payable. Okay, we need to pay this year, so that expenses we need to add. Okay, we have to pay, so add to the concerned expense. And one more transaction you need to add, which is last year prepaid expenses. Last year means, for example, this is 2024, so in 2023 they paid in advance. Okay, so this year amount they paid in 2023, so that amount you need to add. Okay, because that is current year amount, that is current year expenditure, which you need to add. Deduct from expenses outstanding of last year paid current year. So outstanding of last year, okay, in 2023 they have to pay. Okay, 2023 amount they paid in this year, okay, in 2024. But according to the okay rule, current year transactions only will post. Current year means in 2024 transactions will post. So simply deduct that okay expenditure from concerned expenses. And one more thing which you need to deduct: prepaid expenses for next year. Prepaid prepaid means paid in advance. 2025 expenditure paid in 2024, so we won't write this transaction. That's why we are going to deduct from concerned expense. Why? Because we only post current year transactions, only this year transactions we are going to take. And to depreciation is a loss. Okay, reduction in the value of asset, so which is a loss for us, so we post expenses and losses here. So expenses, okay, depreciation and general expenses, expenditure, newspapers, magazines we purchased, so which is a expenditure. And audit fees, honorarium, okay, loss of sale of asset. Okay, these are all the expenditure. Next, coming to printing and stationery or postage and stationery, bank charges, sundry expenses. Sundry expenses means various PT expenses. Okay, and okay, these are all the expenses. Coming to the income side, which is credit side, income side. Okay, credit side, all income side gains. Okay, we post all income side gains. By subscriptions received. Okay, whatever the receipts we'll post in a credit side. So if any adjustment is there, we need to add or deduct. Let us see the add outstanding of current year. Add outstanding of current year means this year amount we need to receive, so that okay amount we need to add. Then add pre-received during last year. Pre-received during last year. Last year means in 2023 we received amount of 2024, that you need to add this year. This is current year, so we need to add. So deduct outstanding of last year received current year. Outstanding of last year we received in this year means in 2000, okay, 2023 amount we received in 2024. So we are going to post only current year transactions, not the previous year, not the next year. So simply deduct it. And pre-received for next year, this is the 2024. This year is 2024 and we received for next year. Okay, we received for next year, which is 25. So pre-received for next year. Next year is 25. So we won't post current year and we won't post next year transactions. Only current year transactions. Okay, only current year transactions we post. So simply deduct from concerned expenditure. Sorry, deduct from concerned receipts. In income and expenditure account, okay, these four adjustments are very important. When to add and when to deduct. Simply you need to remember, If transaction relate to current year, then only you need to add. Okay, if it is a previous year or next year, simply deduct the transaction. Okay, simply deduct from the concerned receipts. Okay, coming to next transactions by entrance fees, by okay entrance fees, okay, which is a receipt, and membership fees if and if revenue. Okay, if it is a small amount, locker rent, we are okay, locker facility we provide, so rent we are receiving general donations. So coming to donations, this is very important. Okay, donations are of two types. So in general donations, if it is a small amount, then take into credit side. If okay, if it is a big amount, simply capitalize that amount. Okay. Now sundry incomes, petty incomes, interest on investments. Okay, these are all comes under income side. So simply make the total. Okay, I forgot to write this. Okay. So, okay, simply make the totals on debit side and credit side, and whichever is the highest amount, write it on both sides. Then, if income is more than the expenditure, then it is a surplus. Okay, sometimes okay expenditure is more than the income, then it is called deficit. In our profit and loss account we used to call it as a loss, and this is a NPO, not for profit organization, we use the word deficit. Okay, always income is more than the expenditure, so we get surplus. Okay, surplus and deficit. Okay, so while preparing income and expenditure account, remember these adjustments, and these 3 points are very important. You need to remember, and the surplus and deficit words you need to remember. Okay. I hope you like my explanation, and thanks for watching my video, and subscribe to my channel for more videos. Thank you.